Good morning, guys. Can everyone have is the audio working and is the video, is the screen showing? It should be showing the market profile charts right now. Is that what everyone sees? Okay, great, great. So, good morning to everybody. Yesterday, wow, what a snoozer. If you didn't get it done in the first hour, there really wasn't a whole lot to do. And that's what happens when we have balance days. Now, the interesting thing coming out of balance days is when we move out of balance, the issue is we really haven't consolidated for very long up here. And usually, before we're going to make a break or a reversal one way or the other, we'll have 2 or even 3 or 4 days of this kind of consolidation. So we are gapping down a little bit. We're down 4 1/4. We've been down as much as I believe 7 this morning, but I'm still not overly eager on the downside. David, you can't see the charts. Okay, hold on a sec. Let's try this one more time. Okay, so everyone should be seeing. Hold on 1 second here. Everyone should be seeing these volume profile chart right now on the ES at least. Is that what we're seeing? Okay, great, great. So let's jump over and kind of go through the scenarios for today, and we'll see where we actually have balance overnight. We have a double distribution there at the top and the bottom. Overnight doesn't mean a lot going into the day. So let's look at the chart and kind of see where our setups will be, and go through the executive summary. Excuse me. Okay, no chart now. I have no idea. Well, let me try this. Hold on, I'll try another system. I'm going to stop one more time and we'll try to restart it. If not, I'll have to restart the meeting. Give me just a second. I don't know why I'm having difficulty with this the last 2 days. Oh, got it. Okay. Thanks, guys. Fixes the problem? Great. Apologies. Apparently, I don't have my brain all the way on quite this morning, but it'll get there by the time we get to the open. So, first of all, I wanted to clarify something. The only area where I have a real issue today, and it was based on where we were opening, is this 2550 to 2750 zone. And so the first thing I wanted to point out was my concern was that if we open at the 30, right, I would be cautious on taking this zone. I'd want a wider rotation lower, assuming it doesn't hold the Globex lows, right? So based on where we're opening now, what I'm trying to avoid in these zones is having the zones stacked up where I can, 2 after 2 after 2. So the way I'm labeling or handling this zone is that I consider it a weaker zone just because of its location relative to where the Globex low is. In other words, if we break, it wouldn't be unusual to have a big break and go right through a zone, right? So the way I handle that is just like I did with Globex low yesterday based on the rotation. Depending on where we open, and you'll notice there's no white zone, and I'm going to have to, as soon as I'm done with this, I may or may not put in a white zone for today. Obviously, bigger picture, the critical area is 1840. We essentially had all of Sunday night, all of Monday night, and all of Tuesday to get above 1840 and a quarter specifically, and it was unable to do so. So clearly the key area is going to be getting above that 1840 level. Excuse me just 1 second here. I apologize. Clearly the key is going to be getting above the 1840 level for the day. If we're unable to do that, we'll probably come back in the back and fill somewhat to the downside. It doesn't mean that we're still not going to go and break new highs. Also, the key to that's going to be watching NQ, right? NQ has led us through this entire rally. I'll still be keen off of NQ. If I see it banging out new highs, I'm going to expect ES to follow. One of the keys for the last entire week has been somewhat of a lack of rotation down in ES at all. Same thing with NQ. NQ demonstrated um, any lack of rotation to the downside, um, more particularly, the lack of rotation in either direction was the concern. In NQ, it kind of busted through in 20-point directions. So that was kind of a key. Usually, I expect some rotation at a 10 to 15 point measure, and it was simply running straight up and straight down for 20 points. That makes my scalping strategy a little bit more difficult. In ES, obviously, after 9:30 in the morning, the rotations became insanely tiny and very difficult to trade. So again, I'll be looking for larger rotations as soon as I see that. Right, part of the key to, and I want to stress this. Okay, so part of the deal is when you have a trade plan and you're looking for X amount of rotation, and you know that you need that rotation in order to make money. We all know when we see the speed and velocity of the market increase or decrease massively. For my strategy to work in a relatively low stress manner, I have to have that volatility in a small range, so I'm getting those snaps out of the zone. If you're entering a trade and it's just sitting there and literally up and down for 4 ticks, it's perfectly okay to exit that trade if you go, this is not my market, right? Or if you look at the market and go, this is simply not the environment where I make the most money. As as an experienced trader or a mature trader, right? You simply go, this is not the environment where I get my quickest results or my easiest results. Now I'm all right skipping on it, and I don't have to keep guessing when it's going to occur, because when that rotation happens, when that volatility on both sides, meaning up and down, increases, I'll see it, I'll know it, and I'll be able to take advantage of it. It usually isn't a one-day wonder, right? We usually go through periods of weeks where we have high volatility, and then we go through periods where, like what we just had over the last week and a half, where we have a relatively low volatility and a very directional market. So to this point, over the last 2 weeks, the first hour has been the best hour to make money, and everything afterwards has been extremely difficult due to the lack of rotation. Also, keep in mind or keep in check, part of the frustration about this market is it keeps going up, and it's making shorts very difficult, and it's not giving us a rotation lower to get longs going. It did yesterday, but it was the one day in many days where we actually had a shot at the long side of the trade, and we actually nailed it. My point to that is that that will change. It doesn't go on forever. And my only objective in that period of time, obviously, I want to make money, but more importantly, I don't want to dig a massive hole trying to force my hand when there is nothing to force, so to speak, right? If I dig a hole and then I need a week just to get back to break even, I've wasted not only this entire week where it's been difficult to get a two-sided market, but when I do get my two-sided market, I need that whole week to make the money back up. And that's where it really demoralizes traders. So what my suggestion is on that is stick to your guns, make sure you're getting the proper rotations down for your trade size. When you do get your trade, make sure that you take it and you observe your stops, your entries, and your exits properly. So even if you're having small days, let's say you're only fixing one trade a day, right? Even if you're having small days, they add up by the end of the week. And then when the market changes tunes, which it always does, right? We always come back to a two-way market. You won't be having to dig out of a hole, and you'll be able to take trade after trade after trade because your confidence will be very high, and your emotional insecurity about losing money will be extremely low. So let's go into the scenarios for today. I've just spoken to several traders who've had some challenges. So you'll notice I've left a nice fat wide swath through here. And the reason for that was that this was simply poorly auctioned yesterday. And the first area of resistance is actually at the bottom of the structure right here. Also notice that gap fill, right, is actually at 1837.50. It's also Globex high, which means this entire zone from 1840 is just it's not incredibly wider, but it is 2 ticks wider than it normally is. It's 2.5 points. I would consider the entire area here from gap fill to Globex high to be one zone. Okay, so let's go through the opening scenarios. Let's say we open at 1833.25. It does not look like we're going to have a trend day in either direction, but let's say we get that. What will that look like so we can identify it quickly? And I go over this every single day because, first of all, just like in every other sport and in every other business, the fundamentals matter, and not getting run over on a trend day, being able to identify it quickly, particularly those guys that are taking trades at the white zone. you need to be able to identify if you're stepping in front of a freight train or not relatively quickly. So, what are the signs? 3 bars down to begin with, or 3 bars up, right? With the first bar being either the high or the low of the day, right? There'll be very little rotation. The NYSE tick usually will be in the positive column and will stay positive the entire first hour, right? So those are the first 3 signs. Also, with regards to, in this situation, if we were going to drive up, right, we would get to gap fill. And since we're opening up underneath gap fill, we would simply maybe take a small pause there, but we would blow essentially straight through it, and we would also have to blow straight through Tuesday's high. Again, that's unlikely considering the amount of resistance it had yesterday. You also know if that does happen, right? So I want to be clear on this. I do not expect us to blow clear through Tuesday's high. If we do blow through Tuesday's high, that would be an indication of strength, right? And I would not be overly eager to short until I got a 7 to 10 point rotation above that point, right? You're going to have a lot of shorts that built up in this area yesterday trapped. Also, I know for a fact that there's a large commitment of institutional traders that have shorted the futures contract up in this area, and they have been having a large short position for the last 2 weeks. These guys will get squeezed above 1840, and then certainly if we get above the old highs at 1845 and 3/4, right? This could actually result in just one very nasty squeeze situation if we get above this area here. So our first test is here, our second test is here. If I'm getting above this 1840, what do I want to see? What I'd really want to see to trade to the short side is actually a trap, meaning we get above and we either test up here, come back in, trade below, and get below gap fill again, and then I would expect to trade to the other end of the range. Exactly like what we had yesterday morning. I called that out in real time. It simply set up perfectly. So what does that mean? I expect us to trade to the Globex low at that point, and then a decision gets made. We're either going to find responsive buyers, or we're going to break below Globex lows and go test the levels lower, all the way down into that 1820 area. On the upside, right? So remember, if you go back and look, and I've suggested this to I think every one of my clients, even when the last time we were in a period where we got to a very narrow range and the market got very quiet, that was right before we broke in January, right? But even in those days, as the market, if you looked at the trend line, the market came down over a period of days. However, on the gross majority of days, the market went something like this: slight push up in the morning, push down over the first hour or two, and then a rotation back up, and then we had either a close at the high, middle, or bottom third of the day, but very few of them closed at the low of the day. What was the best strategy in that situation? Well, you didn't have to worry so much about capturing the downside. It's always attractive because it happens fast, and so it feels easy. But the real money was really made, and the easier trades were made after 9:30 in the morning on those counter rotations up, right? On most days. And then obviously everyone knows that I feel that it gets significantly harder in the afternoon. I reduce my trade size in the afternoon to compensate for that. If I take a trade in the afternoon, and I generally do not trade the last hour at all, it simply is not proven important to building my trading account, which is my primary objective. So let's talk about what the traps would look like on the downside. If we open and we come down to Globex low, again, at this point, if we open at 1732 and we test 1730, I will not be taking that trade. It's simply not enough of a rotation down for me to take the long. So, depending on where we open, if I can get anywhere in this zone, meaning this 1727 to 1725, and I can get at least a 7-point rotation, exactly like we had yesterday, to the downside, I will be happy to take a long side trade. Or, right, if I can't get a 7-point rotation at 6.5 points, I am most likely willing to take the very back of the zone with a 2-point stop, right? The stop is always 2 points behind the back of the zone, but that gets me pretty close to a 1-to-1 risk-reward ratio, and I'm usually willing to risk that. That doesn't put me anywhere close to out for the day. Again, depending on where we open at 1730 and we get to 1720, 550, that's probably not enough for me. Also, consider when I say that, if we open, let's say we open 1731, we rotate up to 1734, and then we reject out of 1734, and then come all the way down, into this zone, that's still valid for me. What I'm looking for is from swing high into wherever we are located in this zone that would equal 7 points down. That's what I'm looking for today. Below that, I can tell you, and let me squeeze these together. I will take a trade at initial support today, long. I'll take a trade at 1817 area, and I'll also take a trade at 1830, and really every zone below there, right? I'm gonna have to see something really dramatic. The only reason I would call this off is if I do see an open drive lower, in which case I may wait, it's unusual because I'm pretty aggressive, but I may wait till after 9:30. If you're not extremely aggressive and we see an open drive lower, it is best to simply mark off 9:30 on your chart. I actually have an alarm set on my phone to go off at 9:30 a.m. to remind me. That's the time when we start seeing turns. And even if they don't turn that hour, remember, we'll tend to get these, let's say we end up with a trend day down, right? The pattern will look like this. Down, down, usually pretty much straight down with quick little pivots from 9:30. 9:30 will tend to get bigger pushes, right? After 9:30 a.m., even if the net effect is still down all the way from there, and these become very tradable on the downside. Remember, if you're looking bearish or you're thinking, well, my gosh, the market's extended so far to the downside, to the upside with no correction. Two things: markets tend to correct from lows. In other words, they tend to crash from lows, not from highs. And secondly, there are a lot of people who have missed this rally and/or were short, and they are going to, by nature, they are going to be looking to get long. Hold on a second. Okay, give me just 1 second. There it is. Okay, audio still should be there. Jeff, that should fix the issue. Thank you. So we were getting a lot of background noise there. Okay, no problem. Super. So I apologize. So what I was saying was, to be clear, is that a lot of people will get in their mind, particularly newer traders, my gosh, we've run so far up, right? We're up almost 100 off the lows, and we've had no pullback, right? That certainly this is dangerous. So I've seen a couple of people throw out that, the market's going to crash. Markets don't tend not to crash from high. NASDAQ in 2001 was the exception to that rule. I don't see anywhere near the frothiness that we had back in 2001 to start with. Unfortunately, I remember some of those days pretty well. In addition, right, you got to remember, a lot of people have missed this rally. So what's that going to generate? If a lot of people have missed the rally, they're going to be looking to be buyers below, trying to get on this train. Even if it fails initially, there will be responsive buyers below. Why is that? Because the Fed policy has not changed, and it's been consistent over the last 2 years, and it has put a floor under this market each and every time. All the corrections over the last 2 years have been purchased. Almost every down day has followed this pattern, where we either come up midway, third, or we come all the way back. And I expect this pattern, it's a very profitable pattern, and I expect it to continue overall. Let me get to the upsides. Okay, and so what would be the traps, by the way, that we would be looking for? Okay, so if we break Tuesday's low and Globex lows, and then we get to any of these zones, right, and we come back up and we trade back into or above Tuesday's low, that would set up a trap and would set up a trade to the other end of the range, and possibly, if we can break above, to close at the old highs. Certainly a possibility, right? I already laid out the trap for the upside, right? It would essentially be breaking the Globex highs or Tuesday's highs. And that can look two ways, by the way, guys. Since the Globex low and Tuesday low are almost equal, however, on Tuesday's highs, there's a little bit of separation. We could come up, get above gap fill and Globex high, test Tuesday's high, and then get back below gap fill and Globex high, and that could set us up for another trade down to the other end of the range. Remember, this would be a relatively narrow range, right? This is 1840 to 1830, 10 points. Our average day range when the market has been moving out of value has been about 30 points, 20 to 30 points. in terms of range. On our balance days, on average, we've had anywhere from 10 to 15 points have been our balance days. So yesterday was an exception in that it was so narrow in terms of the total range, and I would look to see if that's expanding again. What we're essentially doing here, guys, is building a ton of pressure. At this point, that pressure is being relieved to the downside. We'll see how much pressure was actually built there, and we'll see how strong the responsive buyers are. How do I set up the trade on the trap trade? Well, it does a couple of things for me, right? First of all, if I have a trailer, let's say we do get down here, I get along, and we get back above Tuesday's low, and I have a trailer left. For those who aren't leaving trailers, doesn't matter, except for one thing. We get here, I go, oh, we have the possibility of trading to the other end of the range, which would be somewhere for right now in this area. So that tells me two things. First of all, if I want to short, there's really no need for me to, I will not try to chase this right here. At least I wouldn't, right? Because it puts my stop really behind the low of the day. It's too big a stop for me and the size that I trade. But when I get up in this area, I'll know what normally happens when we have a trap trade is we trade up to the other end of the range and we find responsive sellers and we come back usually halfway back through that, and then we'll either go back up and break new highs or come back down to the lows, one of the two. Or balance is our third option, right? At any rate, the point being that if I see this trap trade set up, right, the point of calling that trap trade isn't so someone takes a trade that's not in your trade plan. The point is so I go, oh, let me look at where my next area is, and where you should be putting your eyes is should be right here, looking for that trap trade. Conversely, on the long side, right, if we come up, we get above here, and we get back below and set up a trap trade here, where am I going to be looking long? Assuming this zone has not been tested yet, that this is not the first trade into the zone, I'm going to look right here. If this has already been tested one time, I'm going to move that look to this area. What does that do for you? Well, unless you're dying for a trade, that lets you relax because you know you have absolutely nothing to do for pretty much 10 points. And that can take a while for the market to work out. It may also let you know that, hey, my day's over. And that's cool. By staring at the screen and trying to find something that doesn't exist, it only causes you to find trades that aren't in your trade plan, and it makes it more difficult emotionally to sit through the whole day, right? Go and study your charts, go and improve some trading skill, work on your trading plan, work on your trading journals, but you don't have to be constantly trading. The objective here is to take 1 or 2 trades a day and build your trading account. Let's go look at what we would see on the upper end and where my concerns would be today. Okay, so at initial resistance, I need to make this note, right? This would be new highs, new year-to-date highs on the ES. If the ES is trading up here, I will take a short at initial resistance, but I will not be surprised if I take a stop. Why? We're above Tuesday's highs, we're above the old highs, we'd be at new highs and cash, right? There's a lot of net cash shorts that do not want to get in the same situation they were in last year, and we could very easily see a very large squeeze, particularly above 1850 is my concern. So simply because of the stretch, this was initial resistance, but you need to consider that this could simply close at the high of the day if we get above the old highs, wherever that may be. So please keep that in mind. Shorting new highs is a difficult game, and usually it's easier to short new highs when we get a pattern like this. Okay, so we'll come up, we'll make new highs, it'll break down, and then on the second test, which I rarely say, right, if I'm going to take it, that's the only time where I'll actually say taking that second test sets up a better probability. Only in that you would not want to see a new high broken. But I'm telling everyone right now, when we get to new highs, go look at the NASDAQ. It becomes a very hard game. Shorting becomes a very, very tricky game, and trading the long side is much easier. I took a stop yesterday trying to short NQ, and was simply not surprised when I got wiped out by that 10, and that's because we were trading at or near in the NASDAQ's case is a decade's high. One thing I do want to look at real quick is the NASDAQ overall and go through the executive summary. Oh, in terms of shorts, where will I take shorts with stretches? Okay. If we break above the old highs, I will be hesitant to take a short here. I would expect a pause. If you do take the short here, it's aggressive, right? This will probably be the first place. I want it nice and stretched, right? These are the old highs at 1845 3/4. I'm essentially giving it 10 to 13 points, right? above the old highs before I even consider stepping in front of it, meaning I will not be taking a short here. If I get a pause, I'll simply be missing it. That's all there is to it. I'm all right with that. These are new all-time highs. I don't feel like taking a loss while the market's stampeding in one direction. If it's stampeding really hard and we are staying consistently above positive tick, I may not even take a short at initial resistance. It'll just be a call at the time. The downside, longs will be much easier to make a decision on. Hold on one second here. Let's go over to NQ really quick. How am I doing on time? 8:14. I'm doing all right. Okay, NQ, I have it marked. This is the old breakout point right here, this 36.20, but we can still travel all the way down. I would expect responsive buyers all the way down to this 35.80. There's an open gap sitting right here at 35.80, and I would expect responsive buyers there back up. And the white zone today is sitting in NQ at 36.69. I need to see where we're opening relative to that. We're at 36.70, so we're right above it, which will probably negate my ability to take a trade there. However, staying above it will be important to make the long side easier. It doesn't mean that we can't get a long side if we get below, but I want to see it trading. Obviously, we have to have it above, but it would be a sign of strength if we don't get below, particularly considering, right, where's the gap fill today on this? Is 36.64, which puts us right below the white zone. So the white zone is a critical point, right? So if we open at it, I won't take a trade. There's just not enough of rotation. I need a minimum of 10, preferably 15 points to take a trade in NQ. I simply won't get it out of the gate. This again, assuming we don't have a drastic change by the time we get here. So what do I need to see on NQ, and how will that guide me in ES? So two things to remember. NQ is at new highs. ES is not at new highs. What would make the downside scenario come in? If we can't get above yesterday's high, which was the 1840 area, if we are unable to get above that, right, what would I want to see in NQ? Well, it's unlikely, or it's going to be a pretty big stretch to get us below this, to get us below this open gap. However, there's a lot of distance between here and that open gap. So where do I expect responsive buyers? At the old breakout point, this 36.20, I would definitely expect responsive buyers. That would be a 40-point rotation down. That is not a stretch in NQ. We've been getting 30 to 60-point days. If we had a 60-point day, obviously closing at, we closed yesterday at 36.75. That would put us right above this 3600 area. I would look to be a responsive buyer here as well, and I will definitely be a responsive buyer in this area on NQ. The other thing I'm keying off of on NQ is on the downside, is even if I see ES rolling to the downside, I know that it's highly likely that we'll get responsive buyers back at these levels. It is most likely to drag ES back to the upside with it from these levels. So I'll be watching carefully. On the flip side, right, if you remember from a couple of months ago, when ES had strength, as we've had early in the morning, and NQ has shown a couple of days where we've been weak. But if you remember, let me give you a point of reference so you know what I'm talking about, right? Because at this point, all we're looking for is a change in character, because we're going up every day, right? So I want to know what changes this, what will change this for me in terms of making a different decision, okay? If you remember all these down days, I'm talking about all this, and you'll go back and look, again, from the end of January until the first week of February, right? If you'll go look in the morning, what you'll notice is that NQ every day was leading us to the downside, right? Even when ES was up, NQ was pushing lows and continued to push lows. I would, if I see NQ starting to break new lows before ES, I will be very cautious on taking long side trades, but that is what I'm going to have to see to get at all bearish. Until then, I'm just going to assume that every rotation lower will get bought. I also want to point out on NQ, just like, on ES, I want to point out these days here, right? You'll notice this is where they closed on the majority of these days, okay? We had one day here where we closed on the very low, another day where we closed on the very low. I want to highlight that. Here and here, okay? Every one of these other days, right, even though we were going down, we either closed near the middle or at the upper half of the market almost daily. Oh, there was almost no closes on the lows. So please keep, that's on ES, and NQ was even more exasperated, right? So please keep in mind, right, where is going to be the easiest trade, even if we go into a down market, is going to be finding trade location near the lows and letting the market come up to you. Why is that? Well, because usually when these markets were ripping down, they were ripping down in the first hour, and they required you to take position really in the first 10 minutes to half an hour, and that can be a hard place to get location for a move downside. However, well, once we get past that 9:30 mark, right, we tend to get good stretches into support zones, and it gave us a nice trade location. Not only that, but from those trade locations, you were usually able to leave trailers to scale out. And once we found those lows, it didn't retest. It didn't make it very hard at the low end of the day. And you'll also notice on the way up, we followed that same pattern, right? So if I'm trying to think of what's the easiest way for me to trade this, right? Short has been hard. The longs have been easy. So factor that into your strategy if you've been struggling trading wise. I know I certainly am. And what I mean by that is I will be more inclined to press my longs with trailers and less inclined to press my shorts to the downside. And you don't have to guess. And I stress this stuff again because I keep hearing from people who are fighting it. There's no point in fighting this market or saying it's gone too far, it's going to crash, or any of that stuff. None of that stuff matters on the day time frame. Okay. The easy trade has been to the long side on pullbacks. It's also been the frustrating trade for the last week and a half because we haven't had any pullbacks or reasonable pullbacks or consistent pullbacks, meaning at each level where we can get a rotation in after a 6 or 7 point pullback. We just simply have not had it, with the exception of yesterday. That requires your patience, or it requires you to abandon this style of trading and adapt to the momentum style of trading, particularly in ES, which 99% of the time simply fails and blows traders up. So that's really all I have. I'm going to take. I do want to point out one thing on ES. What time is it? It's 8:20, and I want to wrap things up. I do want to show two things here real quick. Let me go to the 24-hour on ES. Let's get rid of all these lines. This area right here, from 1826 down to about 1822, somewhere in this area, I expect responsive buyers. If we get below this area, right, if we get below and we don't reject out like this, I would then suspect that this is going to become resistance, and we would examine areas lower. And if we examine areas lower, this 1810 level is our next major area. So you should have that kind of highlighted in larger notes. It's a long way away from where we're at right now. But if we certainly get down here today, I would expect responsive buyers somewhere in this level. And I certainly expect in that 1822 to 1826 level, I think we have two levels there. And again, the one on top is somewhat suspect. And the reason why I say that is if we can get through here, we can re-auction this poorly auctioned area and then come back up. On the upside, on ES, looking at yesterday, this whole area, this 1835, all the way up to 1840, right? Very well auctioned. I would expect responsive sellers the first time into this. Like I said, I'd be surprised if we get over it easily. If we do get over it easily, it is going to be short squeeze city. But as you can see, a lot of volume was spent defending this level yesterday, and I would expect them to be back on the first touch. You know, if they get above 1840, right, those guys have lost that bet, and they're going to have their hands forced in to make a push higher. And there's really nothing much above this to hold the bulls back, quite frankly. So that's what I wanted to point out there. Looking on NQ, okay, as you can see, we're very extended. It's not unprecedented. We've had series, right, stretches. Look at this move all the way from 3100, right? We consolidated sideways for an extended period of time here, right? This was a two-sided market. It was nice, okay? But then we went right back up to these up markets. And you'll notice the consolidation, even in the down consolidations, they're just slight consolidations with a slight downside bias, right? There's nothing to indicate to me that we're breaking. This is as close as we've gotten to breaking. And you'll notice it never broke structure here, okay? We held this structure pretty much perfectly. So if you look right now, where's the nearest structure for support? It's small, but it's sitting right here in this area. Okay, and I would expect responsive buyers first time in. This would be the bottom end of the range. This would be the top end of the range. And it would not be unusual to see it come back in right here and find responsive buyers and push back up, right? We could even have a situation where we break this range and we come back in and retest top of this range, right? We come in, we break through, we test the top of this range and right back up, and then this becomes the test. This is bigger picture stuff, right? But the point is, we have not stopped one timing. We've been one timing. We stopped one timing here one day on this balance day, and then we continued higher. Again, we could easily just simply have another balance day waiting to consolidate these gains and continue with the move higher, or, right, it is still feasible. I keep it in my mind. We could break down. I just want to see the sellers come in before I get overly eager to stay on the short side. The long side has been so much easier than the short side in terms of if you're looking from a position standpoint or even a scalping standpoint, right? I can tell you I've been much quicker on the trigger to pull in my shorts than I had my longs on the scalping end of NQ. Let's look really quick at the, what time is it? I have one more minute. I'm going to jump off. Okay. This is NQ. You can see that if I pull this in, I don't know how ability to do that right now. Hold on one second here. I can't because this screws up the screen on this format. One second here. Okay. If you look, we've been following. This is an old channel we've been dancing around this entire period of time for weeks and weeks now. And if you look, we have broken from this small channel we had here, but we've been dancing along this line and we have not had a decisive break. Even when we did have a decisive break, which was down here, we gapped down, right? What do? We traded right back up to it and right back into this channel, right? So this channel's been acting as a magnet all the way up, and right now that channel sits between really 36.97 and 37.10. So shorter term, looking at the trend, if any, coming into the day. Okay, we clearly have to break this channel, but there's been no significant break. What do I want to see in order to get a break? Would have to look something like this on NQ. I'd want to see a breakdown, just like that gap did, but this time when it comes up, we set a decisively lower high. That's really where I'll get interested in pressing my shorts. I'm going to miss the first leg down. That's all there is to it, but I'm not going to get smoked on the way up. Will be my philosophy on NQ. Let's go look at ES really quick. And you should have this channel, by the way, on your charts, guys, because it's been a magnet for almost 3 weeks now. Let's see, ES Daily. And you can see on the ES Daily into yesterday. Right, we've had this channel. Again, we've been in some version of this channel for quite a while now, going back really 2 weeks. The only time we fell out of it, we gapped down and we jumped right back into it. We're still in it as of the moment. Now, where we're opening at 1832, that would put us right here. And I would not be surprised, even if we're going to have a downside, that we don't make an attempt back towards this, again, this 1840 area. You can see where we have all this structure from yesterday. And like I said, I would expect some rejection the first time in, assuming I can get a nice fat rotation in there. I might take a short, again, depending on where the swing low is. But if we get above this 1840 level, man, watch out. I will not be pressing my shorts. I'd rather wait, see a trap trade, and try to grab the second rotation back up for a downside move. I'm just not overly eager to short over this. You got to think the shorts are going to be extremely pressured here. So that's my thought for the day. I'll update it as the day goes on. Make sure you're drawing your trend lines. Make sure you're focusing on 1 or 2 trades a day. Your time of day, have 9:30 marked on your chart. It's after 9:30 a.m. is where we've been getting major reversals, both on the upside and on trend days up. That's at least where we've started to balance the market, is after 9:30 a.m. Prior to 9:30 a.m., losses can rack up relatively quickly. Trying to think if I have anything else. Market gets harder in the afternoon. Trade there at your own risk. I don't have much of a desire to risk capital, and if I do trade in the afternoon, I reduce my trade size. So, anyways, guys, that's what I got. I welcome any questions. I hope this helped, and we'll talk to you later. I'm gonna go get ready for my day.